Single best idea after the idea of a 5-day week that was absolutely extraordinary. We knew going in this would be the busiest week of the summer. All sorts of economic data, earnings, market reaction, international relations, which was ever more surprising than we ever could have expected. It has been an extraordinary week, and none more so than the quality of the guests that we've delivered. The team has just done an absolutely superb job of giving you voices. One of the highlights, just a little vignette, is Jamie Dimon of J.P. Morgan came out with a Washington Post essay today laying out what this nation needs to do to move on to the next administration, whomever will be president. And he harkened back to Doris Kearns Goodwin, and he said, we need a team of rivals arguing collegially in the White House. We started with that. Thank you, Zach Cohen of Bloomberg News, for giving us perspective on, and I like to bust his chops, on Secretary Dimon. I'm sure he doesn't want to hear that right now, but that's how we started Friday today. One of the high points here, along with Richard Clarida, Bill Dudley, and others, was a great privilege of having Claudia Sahm as the jobs report came out. I don't want to go into a lot of time here, a lot of detail, but needless to say, she is the most acclaimed economist in America today. No question about that. Claudia Sahm, out of the Fed, out of Michigan, I should say, out of the Fed, Brookings Institution, and now at New Century. Claudia Sahm in her Sahm rule. Here she is after that grim jobs report at 8:31 this morning.
This has seen way too much momentum in the unemployment rate in recent months. I mean, 4.3%. Right? This is not. So whether we are at that moment of a recession or not, this is your build into substantial weakening in the labor market. All is not lost. We are, the bottom is not falling out. We should never panic. There are policy tools, right. There are levers. And again, I don't overread one data point, but this isn't one data point.
Claudia Sahm on the Sahm rule, and with great collegiality, Michael McKee and others will say, well, the 2 or 3 digits, this or that or the other thing. All I know is we thank Dr. Sahm for sitting with us for this jobs report and her adjusting her view of the American economy. Now, we saw that later on with Ethan Harris of Bank of America would join us, and it was something to see Dr. Harris just say flat out, I was wrong about the speed of the deterioration of the American labor economy. We go back to Dr. Sahm, Claudia Sahm, on the new America.
We have had a lot of disruptions in the labor force. So the supply of workers, you even go back to the beginning of the pandemic, millions of people dropping out, and then we had labor shortages, and then we had larger immigration coming in. Like, this has just been a lot. And we all know personally, and then also in the economy, adjustments can be hard if they are big and sudden. And we've had a lot of that. And so this is absolutely in there in these increases in the unemployment rate. We are still working through disruptions. And yet, underneath that is also a much more typical, pernicious, not good, increase in the unemployment rate of just there's less demand for workers.
Claudia Sahm of New Century Advisors. Joining us after Dr. Sahm was Neil Dutta of Renmac. Neil Dutta was my Economist of the Year for 2023. Shocking optimism while others were gloomy. It's not that he's lost the optimism. He believes in a resilient American economic experiment. But at the same time, he looks at the facts, and the facts have changed for Bill Dudley in his Bloomberg opinion piece earlier this week, and also for Neil Dutta. For Neil Dutta, the facts have changed. After that jobs report, looking at the Fed, linking the labor economic report and the tough revisions over to the Fed, Neil Dutta of Renmac.
I mean, the problem with the economy is that monetary policy is too tight. And that means that looser monetary policy can help resolve the problem. And so, from my perspective, the Fed can just keep cutting until the economy turns. And there's a lot of room for them to do so. So I think that would be the optimistic sort of spin on things, is that, the Fed has plenty of ammunition to kind of, course correct here. I think they'll use it. And, this isn't about household balance sheet deflation. This isn't about corporate balance sheet recessions like 2001. This isn't about an asset bubble bursting. This is just about monetary policy being too tight.
Neil Dutta of Renmac, and we thank him for his support of all that we do. Again, an extraordinary week. We stagger forward to Chicago, to Jackson Hole, and I can say as of 8:30 this morning, this is a different Jackson Hole that we will attend here fourth week of August. We're out on Apple CarPlay, on Android Auto, and on YouTube. I can't say enough about the YouTube experiment. I watched last night on YouTube Premium. I'm a big fan of YouTube Premium. The Olympics. And boy, does it work on YouTube. No ads on YouTube Premium. You get none of the back and forth and the soap opera and all that. You just get the competition of the Olympics and the great announcers from NBC telling us what's going on. I loved watching the Olympics on YouTube. I hope you like watching us on YouTube and listening to us on YouTube at Bloomberg Podcasts. Subscribe to Bloomberg Podcasts out at YouTube. That's a eventful and growing project for us. And on Apple Podcasts, this is Single Best Idea.